2.1 Bitcoin is absolutely an elite level that puts you in the 0.1% of the world, not 1% of the world, 0.1% of the world. Even a small amount like 1 Bitcoin, 0.1 Bitcoin is freaking amazing if you have a long enough time horizon, but we should always aim higher. And 2.1 Bitcoin is a magic number where you are in the very small elite club. And this is what I'm gonna talk about today with my guest Brian Harrington. And we also talk about stretch income versus growth investing, how he thinks about stretch in his portfolio, how he thinks about retiring on Bitcoin, and so many more interesting topics. Enjoy. You are one of the amazing finance people because you are at the intersection of not being full hardcore Bitcoin maxi, macro, or like even worse, a crypto degenerate in there. And you are also not fully like a TradFi guy that kind of shits on Bitcoin. So you're kind of in the perfect middle. What is the most interesting for you currently in this intersection between TradFi and Bitcoin that you're currently seeing?
Yeah, I appreciate it, man. So I've just been really pounding the table on this concept of Bitcoin personal finance. And the reason why it has to be Bitcoin personal finance is because here on YouTube, the like regular personal finance still views Bitcoin as kind of just speculative and random. And then the Bitcoin only sphere kind of is just so wrapped up in like macroeconomics and like the institutions, like that doesn't apply to regular people. And then the crypto generalists, they still are just kind of interested in day trading, and it's just is so focused on what's the little bit of news tidbit about the certain ticker and the timing and like whatever of that. And then a very, very small amount of people are starting to come to my channel from Dividend Snowball and like Financial Independent Retire Early, like kind of channels. And so this is it. It's the first time on YouTube and personal finance in general that I've seen like a path to Bitcoin people and dividend income investors and like financial independent retire early people, kind of like index fund maximalists, like really almost coming together. Like they're as close to talking to each other without talking past each other as they've ever been. And so just really trying to continue to talk at the intersection of that.
Yeah, I've also seen that you're kind of trying this whole income investor versus being a growth investor out. What's been this transition for you? Like, what's kind of your thing with income versus being a growth investor?
Yeah. So I think it's funny that it runs deeper than we all actually know that it does. And one place where it continues to come out is this concept of like the 4% rule versus like having income to cover each bill. And because there's the camp that's like just drive the top line number up as high as possible, drive your top line portfolio up as high as possible, and then the spreadsheet will tell you, what your monthly income is at the 4% withdrawal window. And then those people will kind of say that if you're income investing or you're dividend investing, that dividend funds like structurally underperform growth. And then the dividend guys, I think, just see it as and this is why I lean more towards the dividend side. It just feels like a cash flow thing. Like I've been a personal finance nerd my entire life, and if I was to nail down what I'm like best at, it's cash flow. I think I'm an okay investor. I think I'm like okay at increasing my income and like living below my means. But my best thing, my genuine best thing is like managing just money coming in and money coming out. And I talk about how your portfolio is a battery. You can run it up and run it down. Your credit lines are a battery. You can run it up and run it down. Your Bitcoin is a battery, run it up and run it down. And it's almost like people like I'll get into conversations with people and they are so hyper focused on like driving their top line portfolio number up and then figuring out the 4% rule, but they've never like taken half a day to figure out that they actually could get a home equity line of credit on their house for like 7% or something. Like, and so I'm just a big advocate for cash flow. And so my brain, when I think about quote unquote retirement, I think about matching up income with bills. And one more point on this, the reason why I also believe income investing beats the 4% rule, broadly speaking, is because it's just more flexible. I don't think we're in a world where you like work and then retire. I don't think it's that bifurcated. I think there's many phases, and I think more and more people are kind of tripping over financial freedom and just kind of like you slow roll realize that you're actually there, and you'll always have a little bit of income and a little bit of working income, a little bit of income from your investments, and then you don't have to sell the full 4% withdrawal. Your portfolio can kind of just like tread water, and you can kind of sell off of it to like round out the gaps.
How do you do your portfolio these days? I think like income, do you mostly use Stretch, or like you also go for other products outside of the ecosystem?
Yeah. So I track my income portfolio, which I started in September of 2025. So if people go in my YouTube description, they can find the live portfolio. And yeah, it's like 50% Stretch right now. It's like 50% Stretch, probably like 30 to 40% BTCI, and then which is a Bitcoin covered call fund. And then the remainder of it is I've been leaning more into cash and Bitcoin spot ETF, because my timing of getting into BTCI was back when Bitcoin was around 112,000. So if you look at the BTCI position itself, I mean, that's rode down the entire move down from 120 to 60. And so yeah, a lot of Stretch. And I don't yeah, I don't use, I have a hot take. Okay. I'm not bullish on strategy common stock. Okay. I'm very just neutral. I genuinely don't know. I genuinely just don't. The whole like MNAV discussion and like accretive dilution, I don't know, guys. I just don't know. I'm just very like I went to the strategy world in Vegas. I was there for just the True North day. Um I love Stretch. I love Stretch. Like people can see my tweets about it, see the YouTube videos about it. I personally own a lot of it. I totally understand how that's the tip of the spear of, and I like the concept of the Bitcoin yield curve, all about the Bitcoin yield curve. Bitcoin treasury stock, common stock themselves being like amplified Bitcoin and growing faster than it. I don't know. And so I own like a very small amount of strategy inside a Roth IRA, but I don't like there's no treasury common stock as part of my growth or income portfolios right now.
But wait, what was the other 20% in the income? It was like Stretch,
Cash,
BTC.
spot Bitcoin ETF.
Oh, okay. That's like,
Yeah.
but it's okay. It's like a part of the portfolio, but not really income producing, right?
Exactly. No, exactly. And I was saying and the reason why I've done that is because I've like sacrificed a little bit of the income on the covered call funds and on Stretch in order to try to regrow the principal, because my principal did take a hit during the recent Bitcoin downturn.
Ah, interesting. And outside of that, it's like this is. I mean, we don't have to get into all your portfolio, but I'm just curious how you set it up.
Yeah.
Because like this is like your income thing. You have a separate growth portfolio, or
Yeah. So yeah, but I would just call it like my Bitcoin savings. I don't have another brokerage account where it's like some blend of NASDAQ and Bitcoin. No, it's just Bitcoin. Like, it's just Bitcoin. And so I basically I talk about the whole legs of the table, and I talk about this is like so we have our Bitcoin our on-chain Bitcoin savings. We have our income portfolio, which is a mix of Bitcoin growth and monthly income. And we're like, and I'm withdrawing that to our joint checking account. Like that's like actual living bills money. We have 2 rental properties, and so those have our mix of income and growth. And my wife and I both work, and then yeah, and then the last one is I'm starting a Walmart wholesale company right now where we buy wholesale inventory because Walmart's trying to compete with Amazon, and the majority of Amazon traffic is third-party sellers, and so Walmart has the same sort of third-party seller marketplace. And so I've made a pretty significant investment into like wholesale inventory, and I'm going to continue to kind of compare that to the stretch returns and to the BTCI returns and kind of decide what I want to do, what I want to lean heavier on.
It's super interesting because you now have so many options just in the Bitcoin ecosystem. I mean, Stretch kind of opened the floodgates to you having more options, because before it was like Bitcoin. You can get some altcoins, but I always kind of looked at them as shit coins and scams. Then of course you can go full hard in TradFi, which like what dividend, what income do you get from that?
100%. And honestly, I want to say the same thing. How I gave my opinion about like Bitcoin treasury stocks. I feel the same way about regular stocks too. I don't love the idea. I don't love the idea of being tied to a CEO or a board or anything right now. Like I kind of have like drank the juice on, dude, the world is changing very quickly. The world is changing very quickly. If you've used OpenClaw, if you've used Codex, if you've used these things, like I just don't. I'm not sold on CEOs being able to turn the giant ships that they are in charge of. And Stretch, if I see Bitcoin as competing with the S&P 500 more and more, it's the Bitcoin as the index of the world or the S&P 500 as the index of the world. And the reason why Stretch is so like interesting and so influential is if they can grow the preferred stock market and the amount of companies that issue preferred shares, it's going to make dividend stocks more popular. And so if you're a company, public or private, and you're not paying a dividend, or if you're not growing faster than Bitcoin, then what are you doing? You're just stuck in no man's land. And so I'm not super confident on the amount of companies, Bitcoin or not, that are able to like I think there's gonna be a lot of people stuck in no man's land. And so I would prefer to be in income and Bitcoin.
It's very hard for me to currently invest in Stretch, and it's enticing, but it's also I have my things with that. Like first of all, like I have my business and like I have the income, and so I think for people that have income and that's sufficient and they like, especially if they like what they do, I'm not sure if like Stretch is amazing, but maybe you can change my mind. My thinking is if like Stretch is only really possible if Bitcoin is outperforming Stretch. Like, and otherwise, Stretch will at some point like no longer work for strategy, I think. And so, like, if we have the basic assumption that Bitcoin itself is outperforming Stretch by whatever margin, I look at the next 10 years at Bitcoin performing at around 25% CAGR. I know Saylor puts like a 30% CAGR there. There are people that get more aggressive than that, but I like to be a little bit on the conservative side with like 25%. If you take 100K and like easy math, because I like I had that calculation already. If you put 100K into Stretch for 10 years, you get roughly like 250,000 with a 10% yield on that. Maybe 280, maybe 290, depending on like if they get like 11 or 12% yield. If you take it to 25% CAGR, you get roughly like a million, like 900,000 to 1.1, like depending on what exactly numbers you put in there. So like it makes a huge difference between like 10% and like 20%, especially if you look for like the growth of the portfolio. But the income is enticing, you know, like the having this like just like monthly paycheck that keeps on getting no matter what you do. And it's like very nice. And I know a lot of Bitcoiners are very into retirement. They just like, they hate their job, or maybe they don't hate the job, but they just want to get out of the job and have financial independence. And I think retirement, I think we already covered the topic a little bit, is not doing nothing, but doing what you actually like to do. So I have that like those two sides in me. The logical one, like I want to get the 25, 30, 35% CAGR and have the way high upside, but also the monthly dividend check, like the paid thing is like kind of very enticing. Currently, I'm only Bitcoin and strategy and not in stretch, but I'm like more and more I'm thinking of like slowly building a small portfolio of like also stretch to prepare.
Yeah. So no, I think your logic and reasoning on all of that makes sense. I think I would comment on a few things. I think you're exactly right that the first thing is like, how much do you already like your income? How much do you are like, you're already a business owner, you already like what you're doing day to day. And so no, that makes like a huge role. And so you being able to like have the barbell of like a company that you really like running day to day, and then the growth and the Bitcoin volatility because you already have your cash flow fixed over there, I think makes a ton of sense. I think I would say that, to your comment a little bit back about how there's way more options today than there used to be. Yeah, like the only options back in the day were how much Bitcoin do you hold, how much USD do you hold? Like, and that was it. And that was the constant debate. The constant debate was, well, you know, how much Bitcoin do you hold? And then how much USD do you hold? And then like, well, should your emergency fund be in USD or should it be in BTC? Like, because there's only two sides. Now you literally can, when you factor in all of the strategy products and the Bitcoin covered call funds and like Bitcoin itself, you basically can recreate the S&P 500 volatility and income. You could recreate the NASDAQ volatility and income. You could recreate any index that you want simply using Bitcoin. And so that is beautiful that everyone can like make the ratio on their own. And so I see stretch as I've talked to some people where they're like, hey, I don't have any stretch yet, but I'm like DCing aggressively like the S&P 500. And I'm like, well, okay. I mean, I own stretch instead of the S&P 500. And then it's like you, and how you're saying like, hey, like I own my own business and like that pays me monthly instead of like stretch. I was like, yeah, that makes a ton of sense. I think that the only other thing would be whatever layer you use like a high yield savings account for. I think more and more the high yield savings account, like overfunded emergency fund, is gonna be the stretch money for people.
Yeah, that was kind of the next question I was going to ask you, like how much cold hard cash you still hold if you already have money in stretch that you basically can liquidate at any point. Like it's just like the likelihood of stretch going to zero, I count as like very low. Like that thing just imploding. The likelihood of that is obviously not zero, but about as low as the US dollar imploding, maybe a little bit lower than that. So like, do you still hold like cold hard US dollar or whatever local currency?
Not a lot, no. And it's not for any ideological reason. It's more just like because I'm like, I've talked about this on the channel too. Like I DCA my like lifestyle pretty hard. Like the money that comes in goes out. Like we are really focused on making the day to day like comfortable right now. And so no, there's no the stretch position is our overfunded high yield savings account emergency fund, and the actual operational checking accounts are very minimal.
You said DCA in your lifestyle? Or
Lifestyle.
like,
Yeah.
what do you
I've been
mean?
starting to say that more. Just like, dude, just buying stuff, buying cool stuff. Like owning cool stuff is cool. Like, and I don't, maybe this is like projecting, but I had this issue growing up where it's like owning nice things was like seen as like just such like a hand wringing like thing. Like, oh, like, should we do it? Should we not do it? I'm like, no, like owning nice things is really nice. And this is my issue with the Bitcoin community sometimes too. It's like where they're like, oh, sell your chairs. And I'm like, no, like Bitcoiners should have the nicest chairs. That doesn't make any sense. Like that doesn't make any sense. And I'm tired of these like dumb bumper sticker statements and these like jokes. I'm tired of it always being a joke, because I don't think it's a joke, man. I think it's cool and interesting that Bitcoin has led to financial freedom for so many people, and I don't think it's talked about enough.
Yeah, I think there is a very valuable discussion to be held around you having to enjoy the fruits of your own labor. Like what do you have from dying with a big Bitcoin stack? Like I also don't fully get that, but at the same time, I'm stacking very hard. I have still this very like hard feeling of like, oh, should I get that or should I not get it? Then when I rationally look at my income and my portfolio, I'm like, yeah, I could easily afford that. Why do I don't do that? And then I'm like, but like I can put a little bit more into strategy, and then I just do that. Like I'm such an impulse Bitcoin and strategy buyer at the moment. Like whenever money comes in, I'm like, oh, how much can I put in this, and how much can I put in this? Like I'm like, and then there's this weird voice. I'm like, am I just building some digital numbers up that like what? There's this voice in me that wants to like, oh, let's build generational wealth, like build something huge. But then also like, you have to enjoy the fruits of your labor. Like there's a constant like debate going on inside. I think definitely myself, and I think most Bitcoiners.
Yeah. So I think you summarized the debate well. I believe that I think you can have your cake and eat it too. Like I actually believe it's possible for today to be awesome and the future to be awesome. And I believe that our brains actually underestimate both. Like we actually underestimate both. And I think by like Dan Coe, another YouTuber, calls it strategic stress. He says like when you have all your systems like dialed in, you can add a little bit more strategic stress. And not everyone should do this, but just like, again, for type A people that are consuming Bitcoin content, consuming personal finance content, when you get the apartment that the rent is a little bit higher than like it's $1,000 more than whatever your comfortable number is, that changes your brain. It changes your brain, and it changes what's possible for you. Or this is like the classic thing of you are the average of the people you hang out with. Like when you hang out with people that their day-to-day reality is just different than yours, you start to believe different things about yourself. And so the internal discussion that you outlined is not wrong. It's not good or bad. Like, and it's well summarized. I think that but there's an undertone that like an undertone belief that like, oh, if I buy the thing, then the future will be sacrificed. And I want to flip that entire thing around and like, what if there's also a real chance, there's a non-zero chance that if you buy the thing, your brain changes and you have more in the future than the current Bitcoin and MSTR DCA path that you're on today. Like we just count it as two things. Like, oh, if I stop DCAing Bitcoin today, then I'll have less in the future. No, what if by DCAing the lifestyle thing today, you become the type of person that has more Bitcoin in the future than the current linear path that you're on?
I saw a video like I think like years ago, and it still stuck with me. From I think Steve Harvey is his name, and he talks about if you really want to level up in life, take all your money and buy the first class, really nice upgrade in your plane, and get a really nice suite in your hotel, and live that reality for a week. If you can somehow afford that 1 week of first class experience, you never want to go back in economy. You never want to go back in a too small bed in some hotel room where they treat you bad and all of that. Like once you get to like the high level thing, you're like, I know I don't want to go back. And I think there is some science behind that, where once you are there and you experience the environment, your brain tries to figure out ways to earn more. I think the same
Yep.
principle is true for young dads that all of a sudden have the responsibility of of their wife, because she might not be working for some time, and a new human being. All of a sudden, like two more people rely on him to provide. Then we see the same thing happening with just like people getting in more responsible positions. It's like you have all of a sudden you have to take on more responsibility, not just yourself, because you can, like, it's not that hard to just do, how should I say that, to just be responsible for yourself. But doing that for more people and a more luxurious style, like, that's a lot harder. So I love that you brought it up, because it reminded me of the Steve Harvey thing of like, just get the upgrade at the airport and see what it does to to your brain.
Yeah.
If you live in Europe like I do and want to buy Bitcoin the right way, check out Relai. Relai is a Bitcoin-only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works: buying Bitcoin on a consistent basis. Relai is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug pulling whatsoever. I have been a long-term fan of Relai, not only because it's incredible, easy to use and very beginner friendly, but also because it just works. If you want to get started with Relai today, click the link down in the pinned comment or in the description. And once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relai app and get cheaper Bitcoin if you use code Robin. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups, because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi.
Dude, 100%, man. 100%. Like, and just look, a very real way that my wife and I are doing that, like, just now, like, just last weekend, we were at Legoland, and it was like, let's just buy the upgraded parking. Let's just do it. Like, just to see it. Like, let's compare the walk from that parking lot to the other parking lot. You run it as a test and run it as an experiment. And I think that I think that makes an impact on your kids, man. Like, I think that, like, then their reality, like my 4-year-old's reality was, oh yeah, we parked in that lot instead of the other lot. And it, yeah, like 100%.
I want to stick a little bit long on this retirement topic, because I think a lot of Bitcoiners are curious about it. And I would assume that most Bitcoiners listening to this are less TradFi than maybe your audience is already. What would you say to them that those Bitcoiners might be like 40, 45 years old? That's kind of the average range for my audience. And they have Bitcoin, they have usually a very overexposed Bitcoin position, like myself also. And maybe they have some stretch in there, maybe they have some strategy in there, but mostly they're like very hard on like just spot Bitcoin. And of course, they're like like casual listeners that just like want to see some Bitcoin content, but like the hardcore crowd probably has an overexposure to Bitcoin. At least I would like to think so. What would you say to them as an advice for retirement, as advice for like how to do all the things that you were talking about?
First, it would be that you need less than you think. I believe that you need less than you think of Bitcoin. And I think that there's going to be, I say this thing of like, you're going to have to buy it twice. You're going to have to buy the Bitcoin twice. You have to realize that Bitcoin already leveled up where you are. Again, for the people that you outlined, and I love that it's 45, like, yeah, the audience, skews. I really hammer on like 35 to 55-year-olds. And like, you already have enough. There's also this concept. What I would do is I would go down this other rabbit hole, go down the Coast Fire rabbit hole, where your retirement is funded. It's funded. You don't have to contribute to it anymore because the growth in and of itself will grow. And then, first off, as a starting off point, don't sell. You don't have to sell the Bitcoin. Just simply stop DCAing. Just simply believe that you have enough. Because that's another thing that like the Bitcoin community tries to repeat this to ourselves and repeat this I don't have enough. The first step is rejecting that. Like, I just reject that thing that like you don't have enough. Like, you do have enough. You've already done the hard part. You're in a great position. The fact that you have this decision to make is incredible. And so if you're still working, practice buying the parking or buying the nice meal or the first upgraded ticket out of your current income instead of stacking Bitcoin. Like, that's a step one. And then you feel what it's like to do that instead. And you go from there on how does it feel? How does it feel? And then what I would say also is that there is then an identity piece of, because Bitcoin is also like a philosophy and a movement and like this like political, like moral, like movement for a lot of people, which is fine. And I identify with that and I'm passionate about that. You're going to have to sacrifice like being the guy with X amount of Bitcoin. Like, you walk around with that of like, I'm the guy with X amount of Bitcoin. I'm the guy with X amount of Bitcoin. And just practice reducing that by 1 to 2, by half, by whatever, mentally. Just be like, it's okay. Like, this amount is okay. This amount is okay. So it's an identity piece. It's a pause on DCAing first and just practice DCAing other things and then feel what it's like, is what I would say.
You also mentioned, I don't know if you mentioned it in this podcast or in a video that I just saw before when I researched you, that you think the 4% rule is very wrong and doesn't hold up anymore. Why do you say that? Like, what's the logic behind that?
Because there aren't two halves of your life. There's not the working and then the retiring. There's multiple. And when you have a partner, that complicates it in another direction. So like both of you working, and it's not like, most likely what happens in reality and not the spreadsheet is, someone's boss changes or someone gets laid off, and then it's like the motivation to like reclimb the hill to get hired again might not be there, paired with the number in the account being fine enough to not. And then it's a slow walk into like quote unquote retirement. But then what happens is you get a text from the random person in your network that has a part-time consulting job of the side thing that you're passionate about, and then you have a great home office where you're working on that 15 hours a week, which then supplements your income, and you don't have to perfectly sell down the 4%, like, because like the income is supplementing it. And then there's the whole, like, having lines of credit also makes it so you don't have to sell down the portfolio. You can like run up the line of credit, draw down the line of credit off of the consultant. There's multi variables, more than just this: get a stack of money, withdraw the stack of money. You can withdraw from the stack of money. It's fine to withdraw from the stack of money, and that should be one of your things, and you should get comfortable doing it. But you should also practice asset-backed lending, consulting, like driving. Dude, like there's so many retired guys. Not everyone aspires to this, but there's so many retired guys that like drive an airport trip for Uber every morning because they like waking up and drinking coffee, and then they like go off onto their day from there. Like there's with AI, and then the whole like sprinkle the AI on there of like anyone can make micro SaaS products now. Like you can go back and reserve the industry that you were in-house at, and honestly maybe make a lot of money.
I think also your model makes Bitcoin volatility less scary, because you have Bitcoin now not as the main thing, but you have Bitcoin embedded in other things. So you have a stretch position, you have other positions, and this allows you the bear markets no longer face you that much. Is that also some aspect of that?
Yes, I definitely the more evergreen you can make your life, the better. Your investments and your spending, the more evergreen. Like people like to joke about the like, oh, bear market, I can't go out to dinner. Like, and again, that's a funny joke, and it's fine, and there's truth and an element behind that. But if your decisions are being affected by market timing, that's creating stress in your body. Like, and actually on this, like my second niche that I've been diving down right now is like health, and like all of the like your HRV and your sympathetic nervous system, and like your actual heart rate being okay. And like Brian Johnson, like your resting heart rate before going to bed, like dude, that like focus on that. Like take half of the amount of time that you're like focused on like, I don't have enough Bitcoin, like how do I retire on Bitcoin, and like start to focus on your resting heart rate before bed. Like why is that relevant? That's relevant because it's just, dude, like the Bitcoin's there. It's there. It won. Like it won. It's being talked about the highest powers of the world. And so you're a part of it. 2.1, dude, 2.1 Bitcoin puts you in the top 0.1% of the world that will ever own Bitcoin. 10 million people will ever own 2.1. 10 million people in a world of 8 billion. Dude, you're in the 0.1. Like most people, like the people watching this are in the 0.1.
That's crazy. Like 2.1 Bitcoin puts you in like top 1%. Probably even like more than that, because it's so asymmetric.
Yeah.
0.1.
Mm-hmm.
Oh, I thought you said 2.1.
Yeah, 2.1 Bitcoin. 2.1 Bitcoin puts you in the 0.1% of the world.
Oh, puts in the 0.1. Oh fuck. That's crazy. Yeah, because like this is like the top 1% is already crazy, but like the 0.1% is that's crazy.
And that's where like this is where the mindset stuff of the like how to get good at buying the parking, how to get good at buying the plane, that can feel very like hand wavy and woo woo and just like blah, whatever. Like I actually genuinely believe it's really important, because the gap, the mindset gap. I've talked to thousands of Bitcoiners, both in person and online, like through everything we've been doing. The mindset gap between guy with 4, 5, 6, 8 Bitcoin and like the reality that their life is going to be if Bitcoin hits $10 million is too big, dude. That's too big. That's why like people that win the lottery, like you have to change. You have to change who you are as a person. And I don't think people are focused on that change enough right now. They're still focused on like believing that they don't have enough. And so I think they can more productively round themselves out to be ready.
And health is so freaking important. I think Bitcoiners actually have a good understanding for that. Like I see the health thing growing a lot in the Bitcoin ecosystem, but it's so freaking important that you pay attention to your health. And that's why I also don't like that, like eat ramen noodles, sell all your things. Like that's horrible for your health. Like you, first of all, it's very, very unrealistic, especially if you have a partner. Like if you're single and 18 years old, maybe, okay, go for it, go all in. Might be a different situation, like go all in and like hustle and save everything that you have. You might be in a different phase of your life. But it changes once you want to enjoy life a little bit. That puts me to a new question I had. What factor does age play in all of your thinking about the things that we've talked about the last half an hour?
It definitely plays in. I think historically, like the talking heads of Bitcoin on the internet have skewed like young single male, and I think that has changed in the last 7 years. Like the humans here have grown up. The humans here have grown up. Their actual life has changed. Their actual day-to-day has changed, and so I think age definitely plays a role in just like thinking more about how to live, call it a well-rounded life. Yeah.
One more thing that I want to really get into with you is AI. I think you've made a video with, what was it, Bitcoin, Peptide, and OpenCore. What was that, the video title? Something like that?
Yeah.
How do you look at AI?
Yeah, so it's acceleration. All three of those buckets is acceleration and optimism and abundance. Okay, Bitcoin everyone understands it here. Like Bitcoin makes it so you no longer have to be tied to the like fiat political money and have that play that whole game. And so that's fixing that. And just rounding it out, Stretch and Bitcoin digital credit and the Bitcoin yield curve, that is taking the guts out of the fiat system. Like if Stretch succeeds in taking market share from US government treasuries, that is a hugely like revolutionary thing. And so, okay, Bitcoin is solving that. Peptides. Dude, peptides are amino acid chains are already in your body. Like the amino acid chains are already in your body and they're sending signals to your brain and to your gut and to your body of what to do. Peptides fix your software. Like everyone's really good at hammering the microplastics and the chemicals and the like bad food is like destroying all of us and it sucks and yeah, it does for sure, yes. Also, there's like a relatively cheap amino acid compounds that you can inject into yourself and fix your software. So I don't like that's part of accelerationism that like, no, dude, like we can solve obesity, we can solve these problems, and it can be relatively affordable and mass produced for everyone. And I also love how it's like very decentralized around the FDA right now, dude. The FDA, the United States government, is choosing to slow roll this stuff. And so people are buying peptides off of websites and choosing to self-experiment on themselves and having radical like results for a low amount of money. And so decentralization, not letting the US government get in the way, just like moving forward with like science. And so I think health is going to be customized to everyone. And the AI on your phone, this then circles into AI. Like when you have the tech wearable that then puts your health data and puts your blood draws all on the computer, and then you're able to live chat back and forth with your own health data, and you're able to then go buy cheap peptides affordable peptides and reprogram the software on your body, that is medicine becoming programmable and customizable to every single person. And so you no longer have to be on the mass produced like problem. And then I would round this out with like, then if you choose to eat junk food, as I choose to eat junk food, I choose to do the drug of eating junk food, I can choose to do that. And then I can choose to take like other things and self-experiment on myself. And I look and watch what happens to the data when I do different things. And so that's how all three are tied together. I think it's all part of accelerationism. It's all part of abundance, and they're all kind of building on the same large trends that are happening in the world.
I've heard peptides before, but I've never researched that. Is that like, just give me a quick overview of like how, like a surface level overview of like how they work and like why we should research them. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together.
Yeah, you should research them because they're amino acids and they send signals to your body to do things that your body already naturally does. So it's not like a supplement. So a supplement, when you're taking like magnesium, your body still has to know what to do with the magnesium. So it's good to feed vitamins into your body. If you're under on those vitamins, then it's good to feed the vitamins in, but your body still needs to know what to do with them. Peptides help your body remember what it should be doing. And so the whole thing of like, if the peptide says make more growth hormone, then your recovery and your muscle growth will like be faster. Or if you're healing from an injury, it'll say heal this faster, and it won't have to be like fighting uphill against all the bad software and bad junk that your body has built up over years of just getting watered down by the food and everything that we eat every day.
Yeah, it's crazy. Yeah, I mean, there's a lot going on with health, and there's so much content out there, and it can get overwhelming. Like I get like if you're just like having a job, working 30, 40, 50 hours a week, whatever it is, and you're trying to figure out what to do with your health, it can get very overwhelming. You see a Brian Johnson that does all sorts of experiments with himself. You see people talking about take this, don't take this, don't drink this, eat this. Like it's super confusing.
100%. And on that, if people have a negative opinion about Brian Johnson or a negative opinion about like fitness content or whatever in general, I would reframe it around watch a long form Brian Johnson episode and really dial in on his answers. A recent one, watch a recent one, like Theo Vaughn recently or whatever. And he talks about like he got asked about the carnivore diet or whatever. And he was like, look, to be honest, I don't have a position on that. I don't have a position on that. I think everyone should have a health wearable and should follow their own data and listen to their own body. Like in that, dude, right there, there's too much arguing and storytelling of like, and then you get on like the charisma and like perfect, like the drama of like the both talking heads or whatever of like which one you should listen to or whatever. No, like get a wearable, talk to ChatGPT yourself, and look at what happens. And then he settles it all the way down to like the tip of the spear is your resting heart rate before bed. Your resting heart rate before bed is the tip of the spear. That don't track anything else. Just focus on that. Lower your resting heart rate before bed, because that will then make your sleep better and your body heals itself while sleeping. And then your decision making, both on what to eat and what to invest in, becomes better the next day. Your likelihood to not eat the junk food, your likelihood to exercise, your likelihood to make good investments and be nice to your partner and like be good to your kids is higher. And so it all comes back down to like all of the like fun sauna and blah blah blah, blah all, like totally. Like if you like nerding out on the niche down of all that stuff, great. But at the top, it's just lower your resting heart rate before bed.
It's very true. And actually, when you listen to Brian Johnson, which I really like to do, he talks a lot about not overcomplicating it. Also, there's this like fear of like having it to overcomplicate and trying to just fix the easy things that you can fix. Like start with your sleep. This seems to be the most important one. Have like a sleep schedule, get your resting heart rate down, and from there, like slowly get in the upward spiral. And honestly, I feel it a lot. Like when you have a good night's sleep, you wake up. I really like going into the sun in the first 1 hour of the day. It just like sets the rhythm of the day, and it's really nice. Just like within the first hour, get at least 10-15 minutes out there, and then work out. If I do all three of those things, which is not complicated, just like sleep good, get outside, and what was the third one? Yeah, work out, have some movement in there. I mean, if you go outside, you have already some movement, but if you have something on top, would be awesome. I don't have it all the time. If you have those three things, the day is awesome. Like the day is just so much better than everything else. I'm more disciplined also with like sugar and stuff like that. And it's interesting. And I think he talked about that on an interview. It's interesting when I sleep bad or like the first thing I do is not going outside, just like being an hour on the computer. My discipline is so much worse. Like I'm eating sugary things. I can't focus on the work that much. Like it has such a huge impact. And you don't notice it if you don't look for it. Like you have to be aware of the patterns. That's why I always have a wearable on there. Like I choose Aura because I like the ring format because it's like very non-disturbive to my life. I know people love the Whoop and other things. I also tested the Whoop. I love the Whoop too. But like it gives you so much data. Like, oh yeah, like this works, this doesn't, this works, this doesn't. It's a game changer. I highly recommend it to everyone. Man, I would love Aura Whoop to sponsor my podcast. This would be an awesome thing.
100%. That'd be awesome.
As you might know from previous appearances on my podcast, we have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, and a fun one: what must happen in order for Bitcoin to fail?
Yeah. In order for Bitcoin to fail, I think the people, I do think I'm gonna call him the medium holder, this person, this 35 to 55-year-old living in the suburbs with a W-2 job, like with that has 2 to 10 Bitcoin, like that person, those people stay stagnant in their own personal influence. Their own personal influence and their own mindset stays stagnant, and that causes Bitcoin to fail because those people never punch through to like their next door neighbor that has the ability to hold half a Bitcoin. Their next door neighbor in the nice neighborhood has the ability to hold half a Bitcoin without blowing up the volatility of what they've got going on in their life. And that causes, when this crowd of Bitcoiners doesn't level up their own influence and who they are as people, it keeps it as just a MicroStrategy thing and a these guys on the internet thing. And that really causes it to not hit the next level that it has the ability to.
Interesting. Yeah, like we need everyone on board, kind of like pushing for that, like being active in Bitcoin, I guess. It's
it goes
very true.
And it goes past the old way of being like, oh, orange pilling people. Like it's not that. It's not that. It's like embodying what it means to be a high net worth influential person in whatever country you live in. Like, people know what that means. People know what that means. And if Bitcoin people don't choose to be those people, then other people are going to choose to be those people. Bitcoin is political. It's political. It's a choice. It's a choice. Do you hold your money in United States treasuries, or do you hold it and stretch in Bitcoin? Which one do you hold it in? It's a choice. And so it's it's political now.
I think so too. I mean, you like, what is the biggest vote I think the biggest vote you can possibly make is with your feet, like going out of a country. Like, that would be like the highest possible vote you can make. And the next one is actually like the monetary vote. Like, where do you put your money? Like, what do you do with your money? And then only is for me, the actual political vote, with like voting for Democrat or Republican, or like wherever you are.
Yeah. And I would say one thing I would add on that is the money side of it. You're making that decision all the time, every single time. If you're going to make the like geographic arbitrage thing, I would recommend doing it once, maybe twice, but like do it and then go deep. Don't waffle on that. Like make a choice. Make a choice and do it. Don't waffle on that, and love where you are. Don't because if you repeat to yourself like, oh, this is a bad area, this is a bad area, or like, I don't feel like whatever, you're repeating that to yourself all the time, which doesn't help your nervous system, which doesn't help you sleep well, which doesn't help you make good investments, which doesn't help you get your neighbor to own half a Bitcoin. And so I don't love that's why I try to steer away from the geographic arbitrage thing, because it's just, choose what you're going to do, love it. But then the money side of it and building influence is an all the time, everyday thing.
Do you think that people waste a lot of time fleeing from the problems in their country just to get to another country where the same problems await them?
Kinda, yeah. I'm not sure I think that's one way of putting it. I would dial that down like 20%. I think, yes. I do think the benefits of like geographic arbitrage are a little bit overstated. I think they're overstated, and I think they make sense on like a spreadsheet, or they make sense on a podcast, but I just think the actual thing of like you and your partner and your family and your income and your like an example of this is like in the United States, like the remote work culture in the United States, your salary depends on what state you live in. So moving 100 miles this way in order to have a different property tax structure is fine, but then you just changed your salary. So I don't super buy the like that it all, it's pretty the same.
Yeah. And also, I will move out of Austria. Like I said, it's very early on. And the older I grew, the more I realized I actually like Austria a lot. And the more I traveled, the more I realized, actually, I really enjoy what Austria is having, because you have that weird thing where all the good things you take for granted, and then you just pick on the best thing of some other countries and think like, why can it not be here? And then you realize, oh, all those amazing things that I've been taking for granted here in Austria are so good, because there are some bad things also. there's no country that has just amazing things going on, and so right now I reserve the right to change my mind on that one, definitely. I'll stay in Austria as long as I can, because I love the country. There are certain things where if it gets too communist, like too, like we get in the market and like too high taxes, like I'm out of here. Like I don't have to deal with that, because I have zero income, literally zero income out of Austria. So I'm just living here, not working here actually. But yeah, it's a conversation I have with myself at least once a month, moving out of Austria.
Yeah.
Really cool. Then thank you so much, Brian, for being on the podcast. I think now the third time or fourth time, something like that. It was really cool speaking with you. Before I let you go, where can people find your Twitter, your YouTube, your things that you're doing?
Yeah, just search Brian Harrington on YouTube. I'd appreciate it. Join me over there. Search Brian Harrington on YouTube. I'm throwing a conference in Southern California, November 3rd to the 5th. So if you like meeting people in person and you like the concept of Bitcoin and health like combined, it's at this nice like spa resort place. And so we're gonna have a good like half day of talks on like estate planning and just like building intergenerational wealth. But also I'm gonna bring out a peptide speaker, and then we're all gonna hang out in the sauna and the cold plunges and the hot tubs and everything around that. And so search Brian Harrington on YouTube, and we'd love to see you there.
Awesome. Then thank you so much, Brian, for being on the podcast. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.